Okay, so let's look at a top reversal. Again, one of my favourite indicators, but I short after I've got confirmation. It's a common sign, you see this fairly often. The first bar is marked up rapidly, closing on the highs. That will be on some news if it's a stock. The volume can be high, which would be supply swamping demand, or it can be low, which we call no demand, which we've already showed you. So we can see high volume or low volume here. The next bar rapidly reverses down on a wide spread, closing on the lows. If the low and the close is lower than the first bar, now this is important, I'll repeat this, if the low and the close is lower than the first bar, it'll add to the weakness. As with all these indications, it's important to read the following bars for confirmation. This is important. This sign of weakness is very powerful if you have a strong bull move up behind you. Philip, you said something earlier in the break in tea, and we wrote it down, about the market. Just repeat that, can you, if you can remember it.
Yes, I can, yes.
Go ahead, because that was such a... This is about VSA in general.
Well, what I was saying was there's really two separate types of indicators. You've got the indicators which can change a trend, and you've got confirmation indicators.
That are the highest probability entries.
Which are the highest probability entries. Now, if you see a confirmation indicator, you wouldn't open a trend on it. Sorry, you wouldn't open a trade on it unless you've got confirmation in the background. That's why I would call them a confirmation indicator.
Yeah, I just add to that. I look at it a slightly different way, but it's the same thing. I look at the serious signs of weakness and strength, and we've talked about the serious signs of weakness, the climactic action at the top, the end of a rising market. Those things, they are the warning sign.
Yes,
as the market comes off and declines, you look for the confirmation of the weakness with the no demand or the upthrust.
And tests, yes.
And tests, and failed tests.
Yes.
Yeah, I hope that answers the question for some of you that you look at these things sometimes, and you know, VSA, you can see now, is not all about one bar, it's not about one signal, it's not even about one time frame sometimes, as we'll talk about later. It's about putting the chart into context with the background, and if you can take that from this seminar, that's going to be something that
it's
will
almost like reading. It's almost like reading a passage out of a book or a newspaper. One word, every word individually is important, but doesn't make sense until you read the whole line or sentence.
That's very good. Yeah.
And that's what it's about. You're talking about these top reversals. What they really are is a two-bar upthrust. It does exactly the same thing as an upthrust. And yet they've had the opportunity probably to keep it up there far longer than normal, which will probably be far more better for them, create more havoc if they can leave it up there overnight. Next day it's down. It's really a two-bar upthrust.
Well, let's look at this one in here. This is the Japanese yen. It's a 3-hour chart. Again, this had some great principles on it. And, you know, we'll start off with the arrowed bars that you can see. Now, Philip, this is the first bar chart that we've shown where we've actually got a failed test here after we've got the 2-bar reversal, which is a strong sign of weakness.
Yes.
Now, one of the things that confuses most of the customers who've got VSA for a limited period of time, let's say they've had it for 6 months, they read Tom's book and it says, well, test is a sign of strength. It's covered in the sign of strength. It is discussed that failed tests happen, but let's be clear now. A test is testing something.
Yes, it's testing supply.
Correct. It's testing. Now, when you see a failed test, that will mean the next bar will close lower than the test bar, correct?
Yes.
Showing that it's not ready to respond.
Yes.
Now, in a bull market or in an accumulation phase, you could see 15 tests in a sideways market, as we're going to show you shortly on the signs of strength. But let's now look at this chart here. Now, we notice that we're in an uptrend. We continue trend up here on the yen. Finally, we get this nice surge in volume, nice narrow spread bar closing off the high. Okay, this is this bar here that I'm pointing at. Now, at that point, we don't know this is the end of the market here. It's still in an uptrend. We don't do anything. Suddenly, if you had been long here at any point, okay, bang, they've got you. You're done. Okay, you're stopped out here on this bar, and look at the volume now. Massive volume. It closes on the low. However, we want to see if the next bar closes down. And this is where some of you get confused, because you say, well, the next bar closes up, so there must be some buying in here. There must be some support, and it's going to break out. So then we look for the test. Sure enough, there it is. Look at the volume here. a lovely low volume test, narrow spread, beautiful. When I see that, I know I've got weakness just on this bar, but you would never get into the market on a test. You'd put an order above the previous bar, because if it's successful and pushes through and it's a genuine breakout, that's fine. But I certainly wouldn't be looking at buying the market with that behind me. Would you, Philip?
Definitely not.
It's too weak.
And that's exactly why you put the buy order above the high of the test bar, because you let the market take you in rather than you trying to second guess the market.
And the other reason I wouldn't do it, I like to see tests at the bottom. I don't like to buy the market after a massive uptrend, because you're vulnerable.
You are.
Tom,
yes.
why are we vulnerable after these big trends? Most people feel that they've missed the market. The price is ticking up. They feel they've missed out, and they suddenly see this high volume like this, and they want to rush in and buy it because the price is going up, when in fact you should probably be looking to short it.
Well, don't forget, you're dealing with human beings who want to make a profit, and when the market becomes vulnerable, if it's been going up steady for several weeks or even months, those people in there, they're only human, they want to see some profits here, and they'd be under pressure probably to make profits, and therefore you are vulnerable. You see that vulnerability very, very often. But as far as the failed tests are concerned, I almost describe it as you're in the Sahara Desert and you come across a man dying of thirst, but you've got the water, you kneel down, try to give him the water, but he's so far gone and weak he can't even take the water in. So that's a failed test.
Right, okay, and we've got one here.
If that makes sense.
Yeah, there it is, a failed test. After the widespread down, professional money see this weakness here, test it, the test fails, next bar's down, and then we have a decline. Okay, now look at this bar here. We get some preliminary support here. We know that because we get another test. This time it's positive, and it holds the market up. And it goes up on quite high volume here on this narrow spread bar, comes back down, then it's going back up. Again, the volume declines, these three bars as we go up. And this bar closes down, and we get this sort of sideways motion. Now here is a principle that we've already talked about. Can anybody tell me what this bar here is? Just type in what that bar there is. The volume's less than the previous two bars. It closes higher than the bar behind it. Tell me what that principle is that we've just talked about earlier. Let's have a look. Just type it in. Keep going. Actually, they've mixed it. It's perfect. This is excellent. Come on. Well done. Well done, Janet. Keep going. Keep typing, everybody, because there's a lot of you in here to... What is that principle? We've just talked about it. Look, I'll just give you a refresher. The volume is less than the previous two bars. The bar starts here. It closes. It's got a higher high. It closes higher than the bar behind it, not lower. So it's not hidden. There's a clue. Okay, and the volume is less than the previous two bars. Anybody tell me? It's a sign of weakness, Joey, definitely. Now think about what we said. It's going up, okay, and the volume's declining. Okay, you've definitely got some no demand here, but this bar here is a no demand upthrust, and it's something that Philip and I have been looking at, and they're very, very weak bars, very, very weak. So some of you typed in. Let me just read this to you. It's great. Everyone, I would say, got that right. That typed in. That's most of you. I'd say at least 60%. Now let's look at what we've got here. Some of you said no demand. You wouldn't be completely wrong there.
Nope, it is no demand.
Because it is no demand, absolutely. But it's got an upthrust look to it as well, because it closes off the lower of the bar. But the next bar is actually a better bar because it closes level. It's almost like a test, but either way, it's a weak bar because this bar takes it out. But with this bar here, I would be interested in entering on that bar there. That would be me. Philip?
I'd agree, yes.
That's your entry, because you've got weakness in the background, you're going up on low volume. We come to this old top here, okay, we get a lot of supply on this bar. Look at the volume. Markets don't like that. There's potential selling in there. It goes up, rejects it, and then there's another great entry next door to it. But you all, well done, congratulations to those of you that answered and contributed there, because you're spot on. So clearly we're getting through, which is what I wanted to see. Now we'll look at KGF. Again, we've got a nice example here. Do you want to talk us through this, Philip? AB through. Got quite a lot of, again, some beautiful examples here of weakness here.
Yeah, there's another UK stock called Kingfisher, which owns B&Q in the UK. The DIY firm.
DIY,
Yes.
yeah. It's
a
like
big thing.
like Home Depot in America.
That's right, yes. Well, if we go through, we've got we've got 1, 2, 3, 4, about 10 bars from the left, Gavin. You've got the blue up bar, that first one. That's really the start. There's a little bit of selling in there. And we follow it along. When we get to bar A, you've got some further selling coming in there. Bar B is locking you into a out. If you're long there, it's locking you out. Bar C, you've got a test.
Yep.
Which has immediately failed because its next bar is down. Bar D, there's not a lot of selling pressure on bar D, but remember we've now got some weakness behind us and we're starting to mushroom over. When we get to bar E, now bar E is always a difficult one because it's closed in the middle. You've got a fair amount of volume on that bar. That's showing you that there's some buying in there, but there's also some supply.
It's almost like a battle of bulls
Yes,
and bears. There,
exactly. That's exactly what's happening. There's a battle between the two.
Oops.
But the important thing you've got to remember is what have you got behind you. And there's weakness now starting to come in behind you as you're rolling over. The next bar is a test-like bar, and the bar after that, bar F as well.
That's a good test there.
It is, yes. But remember, we've now got downtrend. They're testing. What they're doing, they're testing the buying on bar E. But bar G is actually pushed down, so that confirms that there's some weakness in there. The bar after that, you've got a little bit of buying coming in there, which allows it to go up. But when you get to bar H, you're back into that area, that bar E again, and this time you look how low that volume is.
It's horrid.
That really is a lovely example. Again, that's a no demand test. You've got no demand on the up bar, and there's also
up thrust.
A no demand up thrust.
You have me concerned. Then I thought that's a new one. We haven't invented that one yet.
No, that's an invent 2 in a day.
No, it's no demand up thrust.
No demand up
and there's another hidden up thrust right next to it on low volume as well. You've got two serious signs of weakness right there. And of course the market plummets off from there and you get a nice widespread down here, another down bar, next bar closes lower on very high volume. Again, anyone that's long there is in serious trouble. So that is again the 2 bar reversal starts at the top, and then once it takes out these bars here, we get back up towards that bar here, which where there was supply, and there's absolutely no professional interest to the upside, and you're in a downtrend. That's the key to it. You're making lower highs. Look, there's your first high, there's the second high, there's the third, there's the fourth. On your fourth high, okay, in a downtrend, so you're making higher lows to the bar. That's what I'm talking about. There's the high, and the next bar, the high of that bar is lower than the high of that bar. The high of G is lower than the high of E, and the high of both of these bars at H and the bar next to it are lower than that. That means you're confirmed in a downtrend. You're making lower highs. That's a serious sign of weakness. Okay, so when you see a 2 bar reversal, after you've seen this VSA set up, which will often mark the top, you should wait for the market to trend down. How many times have we said that today, Philip? We're looking at the downtrend. That's very, very important. Enter a short trade when you see clear no demand entry or no demand up thrust, as we saw then, on either high or low volume. The low volume example we just showed you is perfect. Okay, now let's summarise shorting the market. The things you need to know now and ingrain in your brains to say, right, what do I need to look for? Have you seen a rollover? And is the market in the early stages of a downtrend, or is it still in an uptrend? Ask yourself that question. You don't want to short in an uptrend. Is the market falling with no professional support? So it just keeps coming down on high volume and closing on the low. Is the low of each bar lower than the previous bar? Now, again, the closing, we've shown you the trending system that Tom has put together for a downtrend. You need to study that next week and go and have a look how it works. Try it, okay? And you'll see that when there is a trend, now when a market's whipsawing, it doesn't work, but that's because there's no trend. And if it's whipsawing, you don't want to be trading it anyway, right, Philip?
Absolutely, yes.
Correct. You know, very important there. Are you into fresh high ground? Now that's something we talked about. End of a rising market. The most powerful signal has to be into high ground after a bull run, and that will really mark the top of that market. And it's you know, if you can find 1 or 2 of those a week or even a month on the stock charts, you're really going to start to make some money. Is there a trading range to the left? Is there lots of good news? Now we showed you just one example with JPM. You know, the news will always make your gut reaction to doing what you're doing, it'll make you feel uncomfortable initially when you're trading, because you'll be doing everything opposite to the herd. But if you can trade in a contrarian manner, then you'll be successful. We haven't talked a lot about trend channels here because we're talking about principles, but we do encourage you to use trend channels and to learn where a market goes out of the channel or back into the channel, because if you're in a downtrend, as we've talked about, and you go up to the top of the downtrend channel and the market or the signal is no demand and the next bar is down, then you're going to fall back into the channel and a short trade's going to work for you. Is there the end of a rising market or a buying climax in the background? Now remember, we talked about background. Ingrain that into your heads today and say, yeah, do you know something? When I go next week, I'm not just going to look at the right edge and the signals. I'm going to look at the background. Do I have a clear example of anything like that if I'm going to short? Okay, because that's very, very important. And remember, are you entering on a down bar? Remember, weakness does appear on up bars, but that doesn't mean you can't put a market order below the up bar, but your decision to enter has been made on the up bar, not the down bar. Tom, that's a good question. Actually, Philip can probably answer it. Okay, Philip, because I know we've seen this actually happen, and you're a fund manager. Would you take a short? It's a good question actually. On the end of a rising market, okay, when the parent index is still trending up. That's a great question.
It is a very good question, and I think the answer I'd have to give to that must be a no.
No, and why
Yes.
not? Because the parent will always
Because
drag
the
it
parent
through.
you must always respect the parent index.
Yeah, I agree. I agree.
I think Tom would agree with that.
Yes.